G'day and welcome to the Aussie stock market. We're thrilled to have you here. Have you ever wanted a slice of the action? The stock market can seem like a mysterious place, but it doesn't have to be. The good news is, the stock market isn't just for the high flyers. It's accessible to everyone, regardless of your background or experience. It's for everyday Aussies like you and me. Whether you're a student, a parent, or a retiree, you can get involved. It's a way to grow your money over time, even if you don't have a lot to start with. Small investments can lead to significant gains. Don't worry, we'll break it all down in this beginner's guide. We'll cover the basics and make it easy to understand. Think of it like learning to ride a bike. It might seem daunting at first, but with the right guidance, you'll get the hang of it. It might seem a bit wobbly at first, but with a bit of practice, you'll be cruising along in no time. Confidence comes with experience. So buckle up, grab a cuppa, and let's get started on your stock market journey. It's going to be an exciting ride. This guide is going to equip you with the basic knowledge you need. We'll cover essential concepts and strategies. We will talk about shares, dividends, and the different ways you can invest, and how to actually make money from the stock market. With the right approach, you can achieve your financial goals. Remember, every expert was once a beginner. So let's dive in and start this journey together. Slicing up the pie. What is the stock market? Imagine a giant pizza representing a company. This pizza is made up of all the ingredients and efforts that go into running that company. Now slice that pizza into thousands, even millions of pieces. Each piece is a small part of the whole pizza, just like shares in a company. Each slice represents a share of that company. These shares are what investors buy and sell in the stock market. When you buy shares, you're essentially buying a tiny piece of ownership in that company. This means you have a stake in its success or failure. The stock market is like a giant marketplace where these slices are bought and sold. It's a place where investors come together to trade shares. Think of it like Queen Victoria Market, but instead of fresh produce, you're trading pieces of companies. It's a bustling hub of financial activity. The price of each slice or share goes up and down depending on how well the company is doing and how much people are willing to pay for a piece of it. This fluctuation is influenced by various factors. Now imagine that the pizza company invents a new, super delicious topping. This innovation can attract more customers. Demand for their pizza skyrockets. More people want a slice of this new tasty pizza. What do you think happens to the value of each slice? Naturally, it increases as more people want to buy it. You got it, it goes up. The value of each share rises, reflecting the company's success. And if you own some of those slices, your investment becomes more valuable. You guessed it again. Your investment grows. This is the essence of how the stock market works. Making your money grow: share price and dividends. There are two main ways to make money from shares: share price increase and dividends. We've already touched on share price, but let's look at dividends. Think of dividends like a bonus slice of pizza the company gives you just for owning a piece of their pie. Companies sometimes share their profits with shareholders, and this little bonus is called a dividend. Not all companies pay dividends, but those that do can provide a nice stream of passive income for investors. So you see, investing in the stock market is like owning a little money-making machine. As the companies you invest in grow and become more profitable, the value of your investment can increase, and you might even receive some tasty dividends along the way. Beating the price hike: investing to beat inflation. Remember when a sausage roll used to cost $2? Now you're lucky to find one under $3. That's inflation for you. The price of things tends to go up over time. If your money isn't growing faster than inflation, you're effectively losing purchasing power. That's where investing comes in. Historically, the Australian stock market has delivered returns that outpace inflation over the long term. This means your money has the potential to grow faster than the cost of living, helping you maintain and even improve your lifestyle over time. Think of investing as a way to keep your head above water. Inflation is constantly trying to pull you down, but smart investments can help you stay afloat and even swim ahead. Section 5. Getting your ducks in a row. Prepping your finances. Before you jump headfirst into the stock market, it's important to get your financial house in order. This means taking a close look at your current financial situation and making sure everything is in place. It's like building a solid foundation before you start building your dream home. Without a strong base, everything else can easily fall apart. You wouldn't want your investment dreams to crumble because of avoidable financial stress. Addressing these issues now can save you a lot of headaches down the road. First things first, tackle any high-interest debts, like credit cards. These can be a major drain on your finances if left unchecked. These debts can eat away at your potential returns faster than a pack of seagulls on a hot chip. It's crucial to get them under control. Once you've got those under control, it's time to build an emergency fund. This fund acts as a financial cushion. Aim for 3 to 6 months' worth of living expenses tucked away in a safe and accessible account. This ensures you have a buffer for unexpected expenses. Think of it as your financial safety net, there to catch you if you experience any unexpected bumps in the road. Having this safety net can provide peace of mind and stability. Section 6. Stocks or ETFs? Which one's right for you? Now for the million-dollar question, or at least the $1,000 question to begin with. Should you invest in individual stocks or ETFs? Individual stocks are like backing a specific horse in a race. You're putting all your faith in one company to succeed. It can be exciting, but also risky. ETFs, or exchange-traded funds, are like betting on the whole field of horses. They invest in a basket of stocks, providing instant diversification. This spreads your risk and can be a good option for beginners. Think of it like choosing between baking a cake from scratch and using a pre-made mix. Both can be delicious, but one requires more time, effort, and expertise. Section 7. Investment strategies, slow and steady, or one big push. You've picked your poison stocks or ETFs. Now, how do you actually invest your hard-earned dollars? There are 2 main strategies: dollar cost averaging and lump sum investing. Dollar cost averaging is like dipping your toes in the water slowly. You invest a fixed amount of money at regular intervals, regardless of the market conditions. This helps to reduce the impact of market volatility and is a good option for beginners. Lump sum investing is like diving headfirst into the deep end. You invest a large sum of money all at once. This strategy can be more rewarding if the market goes up, but also riskier if it goes down. Ultimately, the best strategy for you depends on your individual circumstances, risk tolerance, and investment goals. Section 8. Down Under versus Uncle Sam, Aussie versus US markets. The Australian stock market is like a good sausage sizzle, reliable, familiar, and close to home. It's dominated by mining and financial companies, reflecting our resource-rich economy. The US stock market is like a trip to Disneyland, bigger, bolder, and full of exciting opportunities. It's home to global giants like Apple, Amazon, and Google. Investing in the US market can provide diversification and exposure to different sectors, but it also comes with currency risk. The value of your investments can fluctuate based on the Aussie dollar's performance against the US dollar. Section 9. Picking your trading mate. Choosing an online broker. An online broker is your gateway to the stock market. They're like your trusty stock market sidekick, executing your trades and providing you with access to market information. When choosing a broker, consider factors like fees, trading platform, research and educational resources, and customer support. It's like choosing a good pair of thongs. You want something comfortable, reliable, and fits your needs. Don't be afraid to shop around and compare different brokers before making a decision. Remember, you're trusting them with your hard-earned cash. Section 10. The taxman cometh. Understanding your obligations. Now for the not-so-fun part, taxes. Unfortunately, the taxman wants a piece of your stock market profits. When you sell shares for a profit, you'll need to pay capital gains tax. The good news is, if you hold your investments for longer than 12 months, you're eligible for a 50% capital gains tax discount. Dividends are also taxed, but you may be eligible for franking credits, which can reduce your overall tax bill. It's important to understand your tax obligations and factor them into your investment decisions. Consider seeking professional advice from a financial advisor or accountant to ensure you're on the right track. Section 11. Ready, set, invest. Congratulations. You've reached the end of this beginner's guide to stock market investing. You've learned the basics, from what the stock market is to how to choose an online broker. Now it's time to put your knowledge into action. Remember, investing is a marathon, not a sprint. It's about making smart decisions, staying the course, and letting your money grow over time. So, what are you waiting for? Start investing in your future today. If you found this guide helpful, hit that subscribe button and share it with your mates. Let's make investing accessible to all Aussies.